Let's go to the second one. The second one is with a medium risk. So when you talk about medium risk asset class, these are the 8 parameters that you look at. The first one, you will get up to 5% more returns over the repo rate. I just told you repo rate is like the correct rate of return. So what is happening in the market? So if the repo rate today is 6%, and if I'm getting a return which is close to 7%, I'm getting decent amount of return, because that's also the growth that the repo rate is connected to that. When I'm talking about medium risk, I'm taking some risk on my investment. So you should get up to 5% more than what the repo rate is. Then I'd say, okay, I'm taking medium risk on my returns. So that's the return that you can expect from a medium risk asset class. Returns are subjected to medium risk affected by economic factors and global risk. So my investment that I'm doing will have some risk from the market. That is why it is growing higher. But it is medium. It is not too high. It's not too low. It is there in between, right? Third one, tax-free or taxable returns. When I'm investing in a medium risk asset class, the instruments that are there, some of them will give you tax-free returns, some of them will give you taxable returns. It's a combination. Investment is partly capital protected. So the investment that I'm doing, it's not 100% capital protected. It is partly capital protected. So there is a chance that the returns, that the capital might go down. Monitoring required on a yearly basis. Because I'm taking a risk on my investment, I need to monitor it, but I don't need to do much of monitoring. But at least once a year, I need to go through the portfolio. That is for my real risk asset class. Little chances of anxiety and stress due to investment failure. So, because now we're talking, the word risk is introduced over here, there are chances that if the market moves up and down, you are going to feel that nervousness and anxiety about my money getting eroded. So, that chances are there. Yes. The asset class can be preferred for medium term goals. Medium term goals can be 3 to 5 year of goal. You can prefer a medium risk asset class over there, because the cycle might go up and down, but your returns can be managed in that point of time. Asset class can be preferred for cash flow or non-guaranteed events. So when I'm doing medium risk, I am going to get returns. I know that for sure. So it is a good asset class, but not for a specific number that you want to achieve. If it is a specific number that you want to achieve, then you don't want to take that risk. But if there is a fluctuation in return, then you're pretty much okay with that. I needed a lakh rupee and 97,000 is what is achieved. You still fine with it. Even if you make 1,10,000 out of it, you're still fine with it. That's medium risk. So that's for a medium term goal, this asset class is perfect.